The average American family spent $4,100 on gas last year. This June, that number is about to jump by nearly $1,000. And most people have absolutely no idea it's coming. Let's talk about what's actually happening at the pump right now, why it's about to get a whole lot worse, and what you can do before it hits your wallet like a freight train. So look, I want to start with something that I think gets glossed over in every single news segment about this. They talk about oil prices, they throw around numbers like Brent crude and barrels per day, and your eyes glaze over. I get it. But here's what they're not saying out loud. This is not a normal gas price spike. This is not the Fed raising rates. This is not even a recession signal. What's happening right now in the Middle East is, and I want to be careful how I say this, it's the single largest disruption to the global oil supply in recorded history. Bigger than the 1973 oil embargo, bigger than the Gulf War, bigger than COVID. That's not me being dramatic, that's the World Bank. The World Bank literally said that the closure of the Strait of Hormuz has triggered the largest oil market shock in history. Global oil supply crashed by over 10 million barrels per day in March alone. To put that in terms, that actually means something. That's like the entire United States just stopped producing oil overnight. Gone, vanished, and the world is now scrambling to fill that gap. So what does that have to do with you pulling into a Shell station in Ohio, or a Chevron in Texas, or a Costco gas line in California? Everything. Absolutely everything. Here's the thing about gas prices that nobody explains properly. When oil gets disrupted overseas, and I mean disrupted at the scale we're talking about right now, the price of crude oil spikes first. And crude oil is the raw ingredient for gasoline. So when crude jumps 43.6% from pre-war levels, which it already has according to AAA data this week, gas prices follow. They don't follow instantly. There's a lag of a few weeks, which means the pain you're feeling at the pump right now, that's not even the full hit yet. GizBuddy's head of petroleum analysis, Patrick DeHaan, came out and said it flat. This is the most volatile summer at the pump in years. The national average is already 4.56 cents a gallon as of this week. 6 states are already above $5. California is sitting at 6.15, Washington at 5.77, and GazBuddy's official summer forecast, Memorial Day to Labor Day, is $4.80 average nationally. If you're in a state without a big refinery nearby, you could see prices that make you do a double take the next time you pull up to the pump. Let me break down what this actually does to a regular American household, not a hedge fund. Not an oil executive. You, the person watching this who's already stretched thin from 3 years of inflation. The average American drives about 15,000 miles a year. Most cars get somewhere between 25 and 30 miles per gallon. So you're going through roughly 500 to 600 gallons of gas a year. At $3.04, which is what you were paying exactly 1 year ago, that was around $1,570 to $1,880 annually. At $4.56 today, you're already at $2,280 to $2,740. At $5 a gallon this June, you're looking at $2,500 to $3,000. That's an extra $900 to $400 more than last year coming straight out of your pocket per year. And that's just your personal car. That doesn't count the price hike you're going to feel at Target when you grab groceries, or at Amazon when your package arrives, or at your favorite restaurant when the delivery surcharge goes up. Because every single business in America that moves goods, runs on gas too. Trucks, vans, delivery fleets, all of it. And here's the part that really gets me. We already went through this. In 2022, gas hit $5 nationally. People were furious. Politicians got grilled. And then prices came down and everyone kind of forgot, moved on. But that 2022 spike was a blip compared to what could happen here, because back then the Strait of Hormuz was still open. The global supply chain was intact. This time it's not. Now let me bring in the Iran deal angle, because this is where it gets really interesting from a financial perspective. Trump came out just days ago, we're talking May 23rd, and said a deal with Iran has been largely negotiated. There's talk of a memorandum of understanding as a first phase, with broader talks happening within 30 to 60 days after that. And the second that news hit, oil prices pulled back, like immediately, because the market is basically playing a guessing game every single day. Will the strait reopen? Won't it? Is the deal real? Is it theater? That volatility is actually the dangerous part for your budget, because gas prices go up fast and come down slow. That's not a conspiracy theory, that's just how the refining and distribution system works. Refineries lock in crude at certain prices. Distribution contracts get priced in. By the time crude oil drops back down, the guy at the gas station has already priced his inventory at the higher cost. So even if a deal gets signed tomorrow, don't expect to see relief at the pump for weeks, maybe months. Secretary of State Marco Rubio himself said any peace deal could still take several more days just to finalize. So what do you actually do about this? Because I'm not here to just scare you and send you off into your day feeling hopeless. Let's get practical. First thing, if you drive to work every single day and you have any kind of flexibility, now is the time to look at carpooling seriously. Not as a vibe, not as an environmental statement, as a budget move. If you split gas costs with even one coworker, you're cutting your fuel spend in half overnight. That's real money. That's your Starbucks run, your Netflix, your whatever you've been cutting to survive this economy back in your pocket. Second thing, if you have a credit card that gives cash back on gas, and I mean a real rewards card, not one of those junk store cards, now is literally the best time to be using it strategically. Some cards give 3% to 5% back on fuel. At $5 a gallon on 600 gallons a year, 5% back is $150 just showing up in your account. That's not nothing. That's a couple car payments. Third thing, and this one sounds basic, but people sleep on it hard. GasBuddy, the app, is showing price differences of sometimes 30 to 40 cents per gallon within the same zip code right now. That's not a small number anymore. At 15 gallons per fill-up, 30 cents a gallon is $4.50 per tank. Fill up twice a week, that's $9 a week, $36 a month, $432 a year, gone, just because you didn't check the app. Download it, use it. This is not the time to be loyal to your corner station out of habit for it. If you've been sitting on the fence about whether to refinance your car loan or trade in for something more fuel efficient, this is the forcing function a lot of people needed. Gas at $5 changes the math on a lot of vehicles. That Toyota Tundra that costs $114 to fill up right now. That Ram pickup at $92 a tank. Every single fill up. A smaller crossover or a hybrid suddenly starts making financial sense in a way that the spreadsheet couldn't convince you of before. Fifth, and this one's for the investors watching, energy stocks. I'm not saying go throw your emergency fund into Exxon. I'm saying if you have a brokerage account and you're already investing, it's worth understanding what's happening. Oil companies, refiners, pipeline operators, they are printing money right now. Meanwhile, energy sector ETFs are having a completely different year. That's not a coincidence. That's the market pricing in exactly what we're talking about. Look, the truth is uncomfortable. The average American is already stretched. Credit card debt just hit $1.33 trillion. The savings rate collapsed to 4%. Consumer sentiment is sitting at 53.3 on the University of Michigan index. That's deep in recession territory. And now gas, one of the most unavoidable expenses in your life, is at $4.56 today and heading to $4.80 this summer. You can't control what Iran does. You can't control the Strait of Hormuz. You can't control whether Trump's deal goes through next week or falls apart completely. But you can control whether you're prepared or whether this blindsides you. Because here's the cold truth. The people who get hurt worst by a gas spike aren't the ones who saw it coming. They're the ones who didn't adjust their budget, didn't change their habits, didn't stack a little cash in anticipation. Don't be that person, the data is right there. The national average is $4.56 this week, up 43, 6% from 1 year ago. GasBuddy says $4.80 average this summer. 6 states already above $5. California at 6 and 15s. Oh, so the question isn't whether it's coming. The question is, what are you going to do about it before it arrives?